Morning, everyone. It's Chris from Axel as well as Solstice. You can find us on the websites, Instagram, X, as well as Discord. The YouTube channel, the weekly video, is for free for everyone. You can subscribe, smash the like button, share with your friends, let us know what you think, and give us your commentary. Let's go to the first slide that I have up here. And what I wanted to do is show you from February 22nd, the double top on the NASDAQ, which we looked above on the cone and came back eventually further down and we continued lower. But I showed you we were creating lower highs. We had from the bottom higher high, from the lows we had higher low, but from the top we were creating lower highs every time when we doubled up here on the top. Let's go to the next slide. That was on February 28th. I wasn't able to do a weekly video. I had talked to my group on Discord a short, overall review of the market because I was traveling that week. So I wasn't able to do it. So what happened here, we were in a linear regression downtrend channel on the small cap, which is the IWM, or you can use the RTY or the micro 2K, and I showed that we were in a downtrend and at the same time we were in a symmetrical triangle and we were testing the 50 simple moving average on that chart. And from there, we were in that consolidation for a while in the Russell, holding up a little bit much better, but we were creating lower highs from here and higher highs from the higher lows from the bottom. And eventually the Russell gave up a little bit. So remember to check us out at solstice.axalatrai. This is the new server for the website, and give us your commentary and subscribe and let us know what you think is the best way to help you out. And remember, we're not a broker dealer. I have here, what I put here is the weekly chart on the dollar. When we were prior year, we were in the range of 100 all the way to 110. And eventually in 2025, we lost all that gain and came back in the 95 to 96 range. We were consolidating. We were creating that double bottom. Eventually in 2026, we fell below it, rallied up. There's as well in the global markets, a little bit of tension in the Middle East, currency war, as well as oil, and so on and so on. So we can see that the dollar came up on the weekly chart, reclaimed the 23%, but did not close on Friday on it. We came back and closed slightly above the 50 simple moving average. Now we're having the 18 now and the 5 and the 50 simple moving averages are starting to move. We got to pay attention to the 50 if there's going to be a crossing on the 18 simple moving average. Whenever the 18 simple moving average crosses the 50, sentiment is bullish. You can see here when we crossed, we became very bearish. Now we are in that solid consolidation below the 99.50. I am paying attention to. I'm going to zoom it in and I'll show it to you on the daily. I'll put the 14.62% fib right here, which is around the 98.25 to see if it will act as support. You can see the machine grabbed the prior month high and the low, from December on the weekly to the low here. And we can see we are on the weekly candle. We created a big body. We looked up, I came back and sold off and closed right up here on the weekly chart. Let's take a look at it on the daily chart. So what I'm going to do, go from here to the daily. I'm only going to use 9-month for most of my charts. And instead of the weekly, we're going to go to the daily chart right now to show you the dollar, where it is in relationship to that move up. You can see we were consolidating, rally up. We double topped here. We eventually fell. They consider these three tops, fell down, created that shoulder, fell back in, and now we broke out of that large consolidation. You can see there was consolidation here, consolidation here. We weren't able to reclaim it. Now we reclaimed it, coming back to that area and holding this area on the daily chart. If it's going to create a right shoulder, if we zoom in here and we create a right shoulder on the dollar, pay attention to it for continuation back to around the 150 area, 135. So this is very important. Look for the backside of this consolidation and the breakout of this channel and reversing back up. So that's what I'm looking on the dollar. Let's take a look at the small cap. I'm going to use the micro 2K since I brought it up first, and I'll come to the NASDAQ. And what I wanted to show you on the small cap, that consolidation added that symmetrical triangle. And we're going to talk about what happened on the charts from here. This was basically the interest rate from J Powell, and this was the tariff news that brought us back down. We rallied and we were in that consolidated. We weren't able to get out, and eventually we retested this area. The Russell rallied, created lower highs, but we were in that symmetrical triangle in the upper consolidation. We eventually lost this area. If it's going to come back, the Russell lost the 116, the 50 simple moving average, and the 18. If there's going to be a reversal back up, you have to pay attention if they're going to reclaim this box. And what we're going to do, we're going to create a small little box in this area. So what I'm going to do is create that little tiny box in this area. If it's going to look above in that area into it and reject, if there's going to, because we are oversold, or is there going to be continuation to the downside? You can see in the last the Thursday candle, the Friday, the Wednesday was an inside candle of the Tuesday, and that was the Monday candle. If we're going to come back and consolidate in this area, or we're going to come back and reject and continue to the low side, we're not going to be biased. We're going to pay attention to these areas very importantly. And what I'm going to do is I'm going to duplicate this, show you here that this consolidation here of this breakout up here. So what I'm going to do is show you this area here in case we fall back to the backside of this area, coming back to this linear regression and this large consolidation. Maybe we'll find support on the wicks of these candle. I can move this a little bit higher, activate it. I can do this if you really want me to. I'll activate this box and do it this way. So you can see maybe we retest this upper wick, but I'm thinking maybe the retest of that backside, since we lost the 50 between the 116 and the 200, there's another midpoint moving average, which is around this area. This is why I pushed it a little bit lower. So I'm going to activate it again and push it down to the lower section on the charts of this candle, because I think there may be a possibility coming back to down this area. Let's take a look at now the QQ. What I'm going to do is the ETFs, then I'm going to come back and look at it on the micro NQ, which is the NASDAQ 100, and show you a little bit difference how we were in that large consolidation. This was the news on the interest rate. I mean, this was the tariff. This was the interest rate. When we rallied up, you can see I created those two ovals, and I said we may end up testing this area. We had these little tiny gaps which we filled here. This was look below, rally up, try to double top. You can see this area. I consider this area as resistance, and this is a lot of supply right above the head of us. This was the double top on the QQQ that I showed you, which was the NASDAQ, which we came back down, rallied. We fell below the area. We are in an open cone, but we are trending in a downtrend. So what I can do is draw a downtrend channel. Unless it is broken, this is your downtrend channel on the charts on the QQQ. So pay attention to the overall technicals in case there's going to be a reversal back to F3 and reclaiming the 116 and falling back down, or do we continue break these two areas to come to the 200 SMA and eventually get the measured move a little bit more lower. Let's take a look at now the SPY, the S&P 500. I put some markers on it from the prior weekly's videos, and you can see what I've done to it. I mean, if I do anchor from the 23rd, my anchoring on the VWAP, on the charts, if I do anchor the VWAP from the 2025 lows, we are connecting these dots here. We tested a little bit lower. Now we are underneath that VWAP. And if I anchor my highs from here, on the SPY coming down to here, the VWAP is on top. So we have one at the bottom, one at the top. Now we are acting in the lower because of the sell-off on Friday, the news, and this is considered a double top. They tried to push it back up. If there's going to be a reversal, you look for the backside of this channel coming back down and eventually retesting and reclaiming the tariff, as well as the Federal Reserve Board and the 200 SMA. If there's going to be good news in the Middle East, there's going to be a little bit more calm, and Iran gives up and says, okay, we are done. Whether they put boots just for small time frame in and out for cleaning up stuff or not, we have to pay attention to the global markets as well as the Asian market as well as the oil. And this is the SPY. So what I'm going to do, start with the micro NQ here, micro NQ, the Nasdaq 100. Oops, micro NQ typed wrong. And we can see that I put this oval here. I didn't extend it all the way. Let's just zoom in this area because this area is part of that large consolidation before the breakout. We retested it, rallied, retested it, rallied. We were in that uptrend channel. Eventually, we lost it and started to make lower highs on the Nasdaq from that double top here. We looked up, like I said on the chart, we had that double top here. We rallied up, came back in that console, and on Friday, because remember the tech sector and the semiconductor, this has been different noises in the market. This is where I have the value area low. We are underneath last month value area low. That's the point of control. That's the value area high on the Nasdaq 100, but we are in a still, if I draw a channel from here to here, I'm going to just grab it to show you how it will look like. We are just testing that area. We held it, rallied up, coming back. If this time we break it, I think the measured move is the open cone and the backside of these channel in this consolidation here. So in case we do not get a rally back up in the NASDAQ, let's take a look at the SPY, which is micro which we did on the SPY. Now we're going to do the micro ES, and this is very important for people to understand. This was the consolidation on that long time linear regression uptrend channel. You can see it's coming from 12 1/6/2022 till 12/16/2024, and we eventually tested. We broke it, retested it here, rallied up. I left it there as a reference point. I really don't need it, but this consolidation here is very important. So I'm going to zoom from that area. Those red markers are the option expiration, and the change in contract is in green. It shows you when they change the contract on the S&P, the Nasdaq, and so on. So we can see the changing contract and the weekly and the monthly expiration on the charts on the options right there. So we can see that that move up, we're in that uptrend. Eventually, we had a lot of NAS supply up right above our head, and we double bottomed on the S&P. We can see that move down on Friday, tested the backside of that channel, tried to push up. We are underneath the 67.51. If there's going to be a move back down, the measured expected move is around the 6600, and the 200 SMA was at 6608, and eventually by end of the week it's at 6612. If I take a look at the measurements on it, so what I'm going to do, go back to the SPY, do the measurements, and come back to the Meg 7. So let's go to the SPY. Oops. The SPY, we can see here that on the SPY that moved down, which I'm just going to zoom in this area, that double bottom, we are underneath the 675.78. We have a lot of options sitting at the 68.85 area and the 65 50, 55 area. What I want to do, go to the option chain. You can see it here. What I'm going to do, we have here the April. I'm going to move back. Where is it? This is the March. Okay, there we go. You can see that the expected move, where is it? I was looking at it. Where is it? Come down. Okay. You can see the 685. There's $21.54 on the SPY. So if I take that 685 from here, I mean the 658, the 685 to measure the distance down here from this close, and I measure it down, it's going to be in this area. So what I'm going to do is mark it for you on the chart. So we're going to zoom in here. We're going to mark both sides with a little oval. Okay, everyone. So we're going to mark that area here. Okay, everyone, we're going to mark this area. I'm going to duplicate this area to the top. Duplicate. Oops, I didn't duplicate it. Okay, 6. Let's just put it here and make it very thin. Okay, that's 1. Duplicate, grab it down and put it down here so everyone can see it. So if there is a possibility on either side, if there's going to be a reversal back up, we cannot clear the 116 SMA and the backside of that average, that price line that I have up here, which is around the 680. So pay attention to it in case we come back in this area and reject and make a lower high and eventually fall through, or do we continue lower and we create like some kind of a zigzag pattern and we go a little bit lower. It sometimes happens, so we have to be not biased. We have to understand the risk involved on the SPY. Let's go do the micro SNQ and I'll do the mag 7. So let's do the measured move. What I'm going to do for intraday, I'm going to come in to 20 days, 4 hour. The overnight will show in gray. The trading hours in the US is in dark black. This is the area, and you can see the volume is a little bit much bigger than the European, the Asian markets, as well as the Middle East market. We can see the high for the week. This was the Monday high. This was the Friday low. So what we're going to do is get a measuring tool, grab this high here to this low. You can see the measurements, and I'm going to change them to baby blue so everyone can differentiate the colors on the weekly from the monthly. Usually the gray is for the annual, the weekly is in blue, and the colored is the monthly, either in yellow or the colored fibs. But this is a more of a measured move. So if I zoom down here, you can see this is the measurement. So let's go to the daily chart, and I'm going to extend it to intraday. We're going to go daily 9 month. We don't need to go further than that. Push OK. And the reason why I wanted to show this, you can see where the extension, the 50% is on the S&P. There's the 80, we have a 61.8 and a 78.6. Coming back to this area, is it possible? Yes. We have to pay attention in case we look up, we can't make the 38.2 or above the 61.8 and we fall back down through the zero line. You look for the 23, 38, 50, 61, and that will match this area in this here where the options are on that chart. Let's now take a look at the micro NQ, and I will do the same thing for that chart. We're going to do the measurements, go to an intraday. We're going to do 20 days, 4 hour. You can see where the high was for the week and the low for the week. We changed the color. And I'm going to do this a little bit more extended to the left. I'm going to bring it back to the first of the year. And I'm going to do 1. And I'm going to change the color to blue. Push OK. So we're going to change now the measurements for the daily on the chart. We're going to go time frame. On the time frame, we do daily. We're going to do 9 month. And from here, we can see where the measurements are for the monthly chart and meeting the criteria. You can see where the minus 50% is matching this area and the 38.2 on the chart. This is the measurement, the expected move, and we can see it on the NASDAQ 100 in case we fall back into that side of that wedge and the backside of this consolidation here. So this is very important on the NASDAQ. Let's take a look at the MAG 8, Magnificent 7, MAG S. Everybody's looking at the Magnificent 7. We can see after creating those tops up here, I consider this like a crab pattern. This is an eye, this is an eye. We created that head and shoulder. We tried to go up, we couldn't make it, and we're creating lower highs. This is very important if that double bottom holds. If it doesn't, I'm looking for the backside of this consolidation back into that linear regression downtrend channel to find some kind of support here in order to run back up. If they run it back to the backside of this channel or the 38 and get rejection, or the 50, pay attention to it coming back in case things do change. And if the sentiment changes to the upside, you're going to trade what you see on the charts, not what you think. Most important, trade the charts, protect capital, look at the indexes, look at the sectors, look at the individual in the sectors, the stocks that you want to trade, and don't be biased. So let's go take a look at the Mag 7. I have included the Netflix in there, and you can see that we are in that large consolidation on the daily chart from this move up. We consolidated, rallied, came back, retest, came back up. Now we are barely holding onto this area because the sectors are rotating between Meta, Microsoft, and Netflix, and so on. So I just want people to be aware of it, not to be biased on either side and trade what the charts offer you. So this is very important for me when we are trading technicals without being biased. And you can see I did this measurements way back down there. So we're going to remove this and we can see where the weekly's high and the weekly low for the week is on that chart. So if I measure it, this is my measurements for the coming week on the Mag 7. So let's go take a look at the bond sector. We're going to put it back on the Mag. We're going to put the bond sector ZF. And what I did, I used the bonds because you can see we were rallying up in the bonds, and eventually, because the Feds are not going to change rates, you can see the bond charts fell further down, and we retested basically the 200 SMA, came back to the backside of that breakout and held there, but we have the 50, the 116, and the 18 above. So we're going to pay attention if we cannot clear this large consolidation in this area in that box on the bond market. And if I look at TNX, oops, and you can see that their interest rates flipped from being bearish to bullish, and we're back in that consolidation box in that large side on that rate. So last but not least, I want to show one stock or one equity or some kind of an idea. I did not show my Bitcoin. I'm going to go micro BT. Oops, let's do micro BT. And we can see in the micro BT, we tried to reclaim the area at 74,000. And I said, pay attention to it in case we go back up. We had the 68,000. Where is that phone? Sorry, I'm getting interrupted. You can see on the charts that we had because I usually do my videos raw, we came back to the minus 27%, the 23 rallied up, came back into the 23%, rallied up. Couldn't clear this area because everybody was thinking, hey, because of the fear, what's going in Middle East and the banks closing in there, they rallied it up. We couldn't make it on Thursday. It was an inside day. Friday was a sell-off. So you can see if this 18 gonna hold, are we going to hold here to go back, create some kind of a cup? And I put this oval here. So what I'm going to do is grab it, activate it. I'm going to move it just slightly to the right. So in case we do create a cup in this area, so everybody will see it, it turns right and goes back up. That's great. If it falls to the backside of this channel, this is very important. It is in that symmetrical triangle. If that symmetrical triangle is lost and we cannot reclaim it, I'm looking for the bottom end of that graph, which we put those symmetrical triangle. There's 1, 2, 3, and 4. So very important that you understand the risk involved in those charts without being biased on Bitcoin, Ethereum, and so on, whether it's in the banking, and I'll show you XLF here in the banking XLF financial, because you can see that the financial have been getting hammered since January, beginning of January of this year, and we can see we fell down, tried to rally, we created that head and shot, and eventually fell down below that consolidation. If the financial, we had a reversal big candle on the daily chart, and you can see we closed right in that downtrend channel in that wedge, even coming back to the backside of this channel, and the 18 SMA may act as resistance. There may be no opportunity other than just a small reversal back up and coming back down. That's on the daily. And if you look at it on the weekly, the candle does not look very healthy. You can see that's an undecided candle. When we had that big large move down, we consolidated inside, we couldn't make that high here. We tried to go up. We went to the open of that candle. I mean, the close of this candle. We couldn't close it. We came down and fell close underneath it. We had that big wick. We tried to rally this week. Couldn't make it. The 50 SMA is right above us. The 18 is right above us. even coming back to the backside of here may act as resistance. You have that $51.10 in case if the financial will reclaim it, and you can draw a downtrend channel. That's all I'm going to do on it in case we come back and reclaim the backside of that channel and reject in that area or not, because we are in that open cone on that chart, and you can see it. Even if I connect it, we bounced off that linear regression downtrend channel, because if this is lost, the consolidation is down in this area where the breakout happened, and the 116 and the 61.8, that's in the XLF. So I hope this video was helpful. If you have any questions, please get in contact with us. We're here to help at https://solstice.axalatrai.com, or get in contact with us at the 949-414-8484. Take care. Over and